Hello traders, welcome back to my channel. Today we are going to analyze how did I manage to book 136 points profit in Bank Nifty option, that is 46,700 call with the risk to reward ratio of 1:4.46. Here you can see that I have placed my entries at around 379 and exited at around 515 rupees. So this is the option chart and I have placed my entries exactly after this bullish breakout. Now here you can see that I had not waited for the retest of this particular trend line. Now why didn't I wait for the retest will be explained at the end of this video. So please stay tuned and watch till the end. So without any further ado, let's jump into the 15 minutes time frame of Bank Nifty spot chart. This is the 15-minute chart. Here you can see that asset was continuously in a bearish structure. It was making lower lows, lower highs, lower lows, lower highs up to this particular point. Now after this particular point, asset gave a strong bullish momentum and broke this previous swing high. Now that is why this particular swing, I call it as an shift in market structure from bearish to bullish. Now let us apply Fibonacci from this particular swing high to this swing low, that is up till here, and let's extend it. Now what does it say? Today asset opened exactly above 61.8% level. Now as per Fibonacci theory, once asset starts to trade above 61.8% level, it is very clear that asset will give a small bearish dip and then on the breakout it will show a strong bullish momentum. So this was the first confirmation for me to look for the bullish setup. And the second confirmation is the shift in the market structure from bearish to bullish. Now let's jump into the 1 minute time frame. In 1 minute time frame, we can see that asset opened somewhere over here, that is around 46,577, and it was pretty much negative. So this particular swing, that is swing high up to this swing low, this is just an evidence for the Fibonacci to get validated. That is after 61.8% level it will show a small dip, and that is why asset was trading in a negatives over here. So we can see that asset gave a small bullish breakout over here. After the bullish breakout, I usually wait for the retest or I wait for the consolidated breakout. So now this was the breakout and consolidation happened exactly at this particular moment. This particular momentum I call it as the consolidation. Now after the consolidation, exactly at 11:28 I have placed my entries. Stop losses and targets were clearly based on my option chart. This is just for the reference. So this was the theory behind my trade. Now as per the title says, why didn't I wait for the retest? That is because it is very clear that the market has trapped many of the retail sellers. Now in order to analyze the sell side setup, in order how the retailers have been trapped, let's jump into the 15 minutes time frame. So in 15 minutes time frame, once again let us apply Fibonacci from this particular swing high to this particular swing low. Here we can see that asset is opened around 78.6% level. Now many of the retailers, they think that this is an important level just because at this particular point asset shown a bearish momentum. So this particular zone, it will become a resistance zone and many of the retailers will get trapped into the thinking that this is going to be a bearish move. But if we apply, what does the 15-minute time frame say? That it has shifted its structure from bearish. So this was the bearish move and it has shifted its structure from the bearish to bullish. So whatever it is, we need to look for the bullish setups. So let us go into the 1 minute time frame. In 1 minute time frame also, we can see that after this particular negative move, asset gave a bearish breakdown. Now this was the bearish breakdown where majority of the retailers might have taken the trades. That is after this particular retest, that is somewhere over here at 11:31 in order to be very precise. Now if the retailers are very smart, they might have kept the stop losses above this swing high, and some impatient retailers might have kept the stop losses above this particular swing high. Now let us analyze. Imagine if you have taken this trade. Now this level is 46,500, 46,500. So the in the money option will be 46,600 put. Now let us analyze Bank Nifty. 46,600 put, 7th Feb expiry. Let us see. Yeah, this was the setup. You can see that this was the bullish breakout, and at 10:31 you could have taken the trade. So this is where you should have taken the trade, and stop losses would be below this level, below this swing high, and usually we keep 1:2 as a target. Remember traders, if you want to be successful in the long run, that too in Bank Nifty, you always have to keep 1:2 as the target. If 1:1 or as a matter of fact 1:5, it will not work in the long run. You need to work in the higher risk to reward ratios, that is 1:2 and above. See, in this, if we apply this, we can see that asset turned into bearish, and it didn't even hit 1:2 target. It gave a strong bearish momentum, and eventually stop loss was hit, and this is the in the money put option. So remember traders, this was the trap, and that is what I was talking. I didn't wait for the retest. If this trap was not created somehow, or the structure was somewhat different, I would definitely wait for the retest of this particular trend line, and then based on that I would have taken the entry. Since there was the trap created, I jumped immediately without waiting for the retest. So remember traders, always look for the 15-minute time frame bias to analyze what is the bias for the day, whether it is going to be bullish or bearish, and based on that decide the direction for that day. So that's it for today traders. If you found this video helpful, please consider giving it a like, leaving a comment and sharing it with the fellow traders. Until next time, take care and happy trading.